Fiona Anderson joins us now from Business in Vancouver. Good morning, Fiona.
Good morning, Sophie.
Talking about what to do with all our money.
Yeah, that's right. I thought this was a good time of year to talk about it. It's year end. We start thinking about our financial planning. If you want to make charitable donations, make them before the end of the year so you can deduct them. Same with if you want to preserve tax losses, sell some stocks. There's all these times. And also we're starting to think about registered retirement savings plans because we have to make those contributions by the end of February. But maybe it's also time to talk about tax-free savings accounts because people often overlook those. And that's a great savings tool as well. Now, it differs from the RRSP because you don't get tax deduction for putting the money into the account. But the great thing is it builds up. Any money you make in the account is tax-free itself. So it's a great alternative, really, to RRSPs. I mean, they should be working together. But when you retire, if you've got a TFSA as well, you can withdraw money later on tax-free. Unlike RSPs, where when you take the money out, that's when you tax it. So here's some key numbers about the the TFSA. So right now you can put $5,500 in a year. When it first started in 2009, that number was $5,000, so that's gone up. And it's cumulative. If you don't put the money in this year, you can put it in next year. So if you actually wanted to put money in January 1st, you could put a total in of about $36,500 if you had not contributed at all. So that's a lot of money that you can put into a TFSA that can save you money. But it's interesting, 46% of people surveyed by BMO back in November said they didn't understand the rules at all, and that was clear. And only 22% knew the amount of the limit that was $5,500. I think the biggest misunderstanding with TFSAs is the word savings. A lot of people I talk to say, well, why bother putting the money aside if it has to go into a savings account that makes, 0.25%? But that's not the way it works. You can actually put it into anything. You can put it into a brokerage account. You can, invest it in Alibaba. You can do all sorts of different things with it, so it can accumulate. One other misunderstanding is 12% of people said they had over-contributed. Now, that's because we're allowed to put in $5,500 one year, for example. That's the maximum we can put in that year up to the accumulated amount. And what happened in the first year was people were using it as a bank account. They put in their $5,000, then they take out $3,000, then they put in the $3,000 again. Well, that added up to $8,000. You are allowed to put that $3,000 back in, but it has to be the following year. So you do have to, your total contributions one year have to be up to the maximum. If you've put in every year, that's $5,500. If you haven't, then it's $36,500 next year. So those are the keys. Are we actually putting money into TFSAs? In BC, the average is about $19,000. So we are doing some, but not up to the maximum.
We could be doing more. All right, thanks for that, Fiona.